Hey, what's going on, everyone? Today is March the 12th, 2022. We're going to talk about Tom Nash, and we're going to do an experiment. We're going to look at these bank stocks that he talked about on this video. You guys can see it. The video is still posted here on YouTube right here. The best stocks to profit from inflation and high interest rates. He has done this video and has provided a couple of banking stocks that he's looking to do fantastically well for a year, 2022, as Jerome Powell comes in and tries to increase the interest rates. He is suspecting that bank stocks are going to do extremely well. Cool. We're going to track the progress of these banking stocks that he provided us. He has given it a price target within the next year. So throughout 2022, these banking stocks should be around his price target. We're going to try to gauge how good of a stock picker he is in times of inflation and high interest rates. So if you all appreciate my video, my content, hit the like button, share the video, and also subscribe to the channel. You guys will begin to see from my videos, my content, I get ahead of the game. That's the edge that I think we have amongst everyone else into the market. The edge is not in discount cash flow. The edge is not in fundamental analysis. The edge is not even in technical indicators. The edge that we have is in price charts. That's it. Nothing more, nothing less. So we're going to go through and look at these four stocks that he talked about in this video, and then we're going to follow the performance as time goes on. So we already have about 9 months. The video was posted on YouTube on January the 26th. You guys can see it's right here at the bottom left of the screen. January the 26th, he posted this video to YouTube. So throughout this year, we're going to look at and track the performance of these stock picks, see how good he is. The first one you guys can see was Citigroup. The current price on January the 26th was $61.50 right up here, top right side of the screen. He's looking for the price to go to $77. Okay, so let's go to the chart real quick and let's see. He's looking for the price in Citi to go to $77, right? So let's go to January the 26th and let's put this on the chart. Okay, let's follow it. The market in Citi closed right here. Okay, this is January 26th. You see that bottom of the screen? This is where this video was posted to YouTube. He's looking for the market to go to $77, right? That's where he's looking for the market to go. So we can possibly see a profitability of around 18, almost 19% from when this video was posted. 25% is what he has. Now we're going to follow it. That's it. Now you can tell that initially Citi did go up. It didn't hit $77 though. It only came to 69. Now we still got 9 months. This is what these YouTubers try to push. They push the time frame as to when to get out a play. I push price levels on when to get out. So in the next year, wherever Citi's price is trading, you got to take the loss. You got to take the profit wherever the price is. So let's try to follow this. All right. So now let's extend this out to the full year. Okay. Let's follow this all the way to 2023. All right. Now I'm here to tell you right now that this market in Citi, you guys can tell. Look at this. I'll keep it a buck. Look at this. I was keeping track of the trend into the market in Citi, right? This is where the bottom occurred in Citi. And one thing I push on this channel is you need to respect trends. You got to respect it. The market in Citi, March 2009. Okay. This trend started all the way back in 2009, right there. And the market in Citi confirmed the trend numerous times. It did not break the trend, right? Look at that. We broke the trend in Citi March 2020. But then price in Citi came right back above the trend December 2020. And we saw price get rejected. And now look at this. I'm just going to tell you what's up. Look. Citi is breaking the trend again. I'm just here to tell you that that's not a good thing for us to see the price hit that price target of $77 for Tom Nash. That's not good. I'm just saying. So in the next 9 months, hopefully, price will come back up above that trend. But guess what? We're going to keep track of it. We're going to pay attention to see if that's going to be the case. Okay, so that's Citi. Let's look at the next one. Okay, we'll go ahead and put this back over to the daily time frame because, like I said, we're going to follow this on the daily perspective. That is on January 26th. All right, the next one that he talked about was Wells Fargo. Okay, the price was around $52. He's looking for it to go $10 higher to 62. Let's see. Wells Fargo, let's check this one out. Okay, let's go ahead and drop the price target. He's looking for the market to go to 62. January 26th was when this video was posted. Okay, now let me zoom in so we can get this right. January 26th. This is where the market in Wells Fargo was trading at on the close. Okay, now check this out. He's looking for you to hold these plays for a year. Okay, let's keep it a buck. Look at Wells Fargo. The market actually came to $60.30 February the 10th. Look here again, February the 11th is still traded up there. Now, which one are you? Are you a price level profit taker, or are you a time horizon to where you exit out your position? Because if you are a time horizon individual who holds stocks for a time period, then you missed out on you taking the bag. This was your opportunity to take Wells Fargo out a profit of 9.82%. See, he was showing you all that then. 52 to 62. Market has not hit 62 though. It hit $60.30. So which one do you follow? Would you take the bag? Would you take the profit at $60, or would you wait until the full year happens to see where the market in Wells Fargo is at then? That is the conundrum. That is why I push price levels on when to get out of position. So considering that the price in Wells Fargo did not hit that $62 price, okay, let's pull it up. We have to consider that we got to give him 9 months. We're going to continue to give Tom Nash 9 months to follow this play. So let me bring that in closer to January 2023. So we have this long to let this market in Wells Fargo hit 62, right? Now, you can see that the market currently is down almost 12%. I get it. Got it. Cool. Now let's look at this though. Okay. Now, Wells Fargo is not as weak as Citi was. It's not. We actually see buyers coming into the market in Wells Fargo right here. So let's bring this up closer. So as we go throughout these 9 months, let's say Wells Fargo holds support there, right? And get buyers. It might even happen around 46. I could see that too. Let's say as we go throughout the rest of these 9 months of 2022, Wells Fargo breaks this $44 to the downside. You might as well let it go. I'm not looking for the market to hit $62 like Tom Nash is expecting. And this is just a coincidence, right? I just want to give you all this heads up. Is it a coincidence that he's given a price target to where the market was already hitting highs in Wells Fargo, right? This was the top right there, 60. That is where he should have had his price target, not 62. Here it is. You guys can see it right there. He had a price target for Wells Fargo at $62. He should have did it around 60, and then he at least could have gotten that right. Right? Yeah. So look at this. Considering that the market in Wells Fargo could not break above $60 on this last movement during the week of February 8, 2022, since it couldn't do that, I know now that it's less likely that the market in Wells Fargo is going to hit $62. Yeah. But we got 9 months, so we're going to keep track of it too. All right. Now, let me hit this back over to the daily because I want us to continue to see the market in Wells Fargo on a daily basis. There it is. All right. Let's look at the next one. He talked about Citigroup. He talked about Wells Fargo. The next one that he talked about was Goldman Sachs, right? He had a price target of $460 for Goldman Sachs. Not bad. Let's go ahead and look at it then. All right, Goldman Sachs. So let's go ahead and drop the price prediction. Like I said, he did it on January the 26th, okay, which is right there. Let me bring down to where the market closed on the 26th. Okay. He had what? Price target of $460. 460. So let's bring this all the way up there to 460. Okay. So he's looking for this market in Goldman Sachs to go all the way up here. 34% run. 38% then. Cool. Now, I want you all to see this. Let me pull this back. So now let me show you all the high that came into the market in Goldman Sachs. The all-time high that ever occurred in Goldman Sachs, right, was up here. Now, why would it give you a price target of 460? I don't know. Because we've seen numerous times, numerous 2 weekly price bars that Goldman Sachs could not break above 420. But he wanted to drop a price target of 460. I don't get it. Maybe it was his DCF model that was giving him that price. Because obviously, the market got hung up at 420. Now, take a look. This price in Goldman Sachs is still pretty good in the upward trend. I get it. But we only got 9 months left for us to really see Goldman Sachs hit $460, right? We only got 9 months. So wherever the price is in Goldman Sachs, right, we would have to take the bag. And I'm here to show you right now that this is weakness on the chart in Goldman Sachs right now. So currently, in the near term, over the next couple of months, this market in Goldman Sachs is weak. Okay. Yeah, it's weak. It might even come all the way down to 280. In the next 9 months. Okay, so we're just going to follow the market in Goldman Sachs. There it is. It was trading around 335 when he, I guess, did his video. He's looking for it to go to 460. Basically, I'm not looking for it to go to 460 until we see price break 420. Yeah, I'm not even looking for it to go that high. All right, so now let me hit this back over to the 26th. And we're going to hold the price there. And that's it. All right. Straighten this up just a little bit. And we're going to follow it all the way to 2023. Got it. All right, cool. Let's see what happens. Let's see how we end up in the next 9 months. Let's look at this last one. Okay, the last one that we're going to look at that he talked about on the video was JP Morgan. Now, he said on the video that it was kind of risky. It's not as strong as the other three, Citigroup, Wells Fargo, and Goldman Sachs, but he still talked about it, right? He didn't give a price target, I don't think, but I can still show you what we got on the chart. Okay, so he did the video on January the 26th. Okay, so let's go ahead and do it for JP Morgan. Okay, he's looking for the market to go up in price. Got it. Cool. Let's just say he was looking for a 10% return. Well, let's do 20. Let's just take it to the high, right? Let's just see. Now, you can tell even in JP Morgan that the market high could not even break back up above 170. And I'm here to tell you this 5 weekly price bar is emphatically weak in JP Morgan. That is massively weak. That the continuation of weakness is still going to happen into the market in JP Morgan. Now, looking at the chart, the buyers may approach JP Morgan here at $123. We can actually see the market come in there. But the biggest area that we can see the buyers approach the market in JP Morgan is here. Let me take this. Let me take this line right here. That is where the buyers are here. Okay. Now, basically, this 5-weekly price bar letting me know that over the next couple of months, I'm not looking for JP Morgan to go up. I'm looking for it to go down at least to 120. That's the biggest area that we can see the buyers in JP Morgan. Okay. Can we go a lot further than 120? Yeah. Can we go a lot lower than that? Yeah, we can. But basically, even JP Morgan is not looking good to go up in price. Okay. So let me go ahead and we're going to follow this market too. Okay, right there. So let's just say he wanted to try to get 10% out the market. Let's just do 10%. Let's be conservative in that. Okay. Now we're going to follow this because, you know, he's prone to delete videos off of his channel. Right now, the market is down 12% since he did the video. I'm going to take it all the way down to 120. Okay. Now we're going to follow JP Morgan too. We just want to see if he could get 10% out this play. Okay. So we got JP Morgan. We're going to follow that until 2023. We have Goldman Sachs. Okay. Which is right here. Currently he's down 5% on Goldman Sachs. Okay. We're going to follow this to 2023. Next one we have is Wells Fargo, WFC. Currently he is down, what, 11, almost 12% on that play. Okay, we're going to follow this till 2023. And then the last one is Citigroup. Okay. Now, the whole premise of him conducting this video was to find a play that we can profit from as interest rates go up. 16.67% he is down right now into the market in Citigroup. We'll come back in eventually and do another update to see how these plays are going till 2023. That's how long we're going to get this market. Okay. Now, I'm done. That is it. We're going to come back later and check out the performance of these stock picks that we should be able to profit from. He got that in all caps. So we're looking to make money off these plays. Let's just see what happens. Because I already know someone's going to drop a comment and say, well, he didn't think about, you know, Ukraine and Russia. I get it. Yeah. Neither did I. You don't have to consider these unequivocal events to happen. Like, nobody can foretell what's going to happen in the next month, the next day, the next year. But you are able to come in and do price targets though, right? If you're not able to try to consider everything that you can think under the sun that you think could happen, you should not be doing price targets. You shouldn't. That's why I don't focus in on all of these unknowns. I focus in on what I do know. And what we do know is what's going on charts. All right, so let me know now. Hit me up. Tell me your thoughts about where you think these 4 banking stocks are going to be at the end of 2023. Let me know. All right, make sure you maintain the profitability. And as always, trade different.